Okay, part two. Let's continue on common stocks. Just a little review again. The reason we generally buy stocks is not for ownership or to vote, but because they're going to increase in price or appreciate in price over time, and dividends will be paid. And again, we want to take dividends as stock and not as cash. Okay. On 490 and 91, they talk a little bit about the psychology of investing in the stock market. I'm not sure that I understand that this much. As I said, I'm in it for the long haul, the long term, and I think if you do that, you'll just do fine. Some of the psychology that people talk about is when to invest and when to sell. I think the best thing again is to set your goals, and again, you get a 5-point credit for sending in a goal or two that you're going to have as you invest. And then when you reach your goal, take some money out, for that particular goal. So I'm not too big on that. Did talk about income from dividends on 491. Again, we're going to take dividends, obviously, as stock, as we talked about. Okay. Want to talk about an element or concept on 492, and that is a stock split. Okay, when most companies like to keep their stock prices relatively low to attract investors, especially newer investors like all of you will be, even myself, I don't go for the high price stocks. And one way to do it when the price gets high and the company is doing well is to do a stock split. A good example is a 2-for-1. Let's say that we had 100 shares of stock at $100. That would be $10,000, kind of like what we're doing in your stock tracking assignment. What the company would do for a 2-for-1 split is they would give you 200 shares and cut the price in half to $50. So you still have $10,000 in the investment, but the price goes in half and the amount of stock you have doubles. The goal there is to keep the stock price relatively low. This is very, very positive. When stocks split, that means the company is doing very good. And so if you see a company where their stock splits every 5, 6, 7 years, I think that's great. So a stock split is something that is very good. Okay, preferred stock on 493, not going to spend much time on that. Preferred stock, kind of like the word preferred or preference. They get preference on dividends. There's really not much preferred stock out there. Most of it is willed, generally from parents to children, sometimes to grandchildren. They get, like I say, first call on dividends when a company declares dividends. There's usually not too much preferred stock out there, so there's not a lot of preferred stock. It does not have voting rights. And like I say, it's almost like a family heirloom. Now, when you evaluate a stock issue, and this is something that, quite frankly, we're probably not going to do. Even I don't do it. I certainly follow the stock market. Most of my money that I invest is in mutual funds, like I'm encouraging you to do. But there are companies that will do individual stock issues, and you can get information on the internet, obviously. You can get it through newspapers, not so much now, but the Wall Street Journal in particular. On 497, you'll see what's known in particular as Value Line. Now, Value Line is very expensive, but you can go to the public library and get it for free. I've looked at these in the past once in a while, and we won't spend much time on Exhibit 14.7 and 497, but on Value Line, it just gives you a lot of information about a given company, in this case Home Depot. And in the middle, or somewhat toward the bottom under valuation, you'll see all these measurements over time, usually 5, 6, 7, 8 years. One thing that you do take a look, even when you're investing with a mutual fund, is what we call trend analysis. And trend analysis is how a given stock or a given mutual fund is doing over an extended time period, 5, 6, 7 years. So take some of the bumps out of the market, and you can see how they're performing, in particular maybe how well they're performing versus the market as a whole. On page 498 is the back side of that Value Line, and has a number of different things that you can take a look at. I'll be honest with you. I don't look at those at all. I mean, I do follow some certain companies, see how they'll do. Once in a while, I'll go online and see if a company's making money and what their returns might be. But I don't go into it that much. I would rather have a stockbroker do it. There are some numeric measures that you need to know. Now, again, there will be no math in this class, not a class in financial mathematics, as I've said, but there are some measurements that you need to know and understand because you'll certainly be tested on them. One in particular on 499 is called EPS, earnings per share. And if you turn over to page 500, you can see the way it's measured, and that is the after-tax income over the number of shares outstanding. And in this case, it's 3.28 or $3.28. Now, this is a particular one for Walmart. Is that good or bad? Well, it depends. It's probably pretty good. Walmart continues to perform very well, but that's why you want to look at the trend analysis and see how Walmart's done over the last 5 or 6 years. The next one that is equally important that you need to know on 500 in the middle of the page is known as the PE ratio, and that is the price to earnings ratio. And this is very important, and you'll notice this is also for Walmart. On a given day, it's got the price per share, which you can get by going online as you're doing in your stock assignment, over the earnings per share that we just saw up above. And that gives you 25, so turning over 25 times, which is quite a bit. That would tell you that Walmart is doing good. But again, you look at trend analysis. Sometimes companies or people that really do analysis will look at peer analysis, and that is other companies, in Walmart's case, other retailers like Target and other big retailers to see how they're doing. Okay. The other thing that you might take a look at is what's known at the bottom of 502, and that's the total return. And basically what that does is it looks at the income that the company's made plus the dividends, and they will divide that over the original investment, or you would. And that will tell you what your return is. And if you look at the example in 503 in the middle of the page, this happens to be 3M, a large company, Minnesota Mining and Manufacturing. Their return is 12.1%. Obviously, that's very good, and that's why we invest in the stock market. This combines the appreciation in value plus the dividend, and if you put that money in a passbook savings, obviously you'd get 1 or 2% at the most. And on this particular time period for 3M, it was 12.1%. So obviously, this is why we invest in the stock market. Okay. Talks a little bit on 505 about investment theories. I'm not going to pay too much attention to that. Again, we're in it for the long haul. We get in, we stay in, and then when it makes sense, especially when we've reached a goal, we'll pull some of the money out. Now, some of the secondary markets for stocks that you do need to know a little bit about. I gave you the one sheet to help you with your stock portfolio and your stock assignment. And these list the 30 stocks that are on the Dow Jones Industrial, 20 stocks on the transportation, 15 on the utilities. The important one that everybody takes a look at every day is the Dow Jones Industrial Average. It started in 1896. There are only 30 companies on it, but they have great diversity. As you can see, if you look at this list, these are all big, large companies. It's interesting on that list, there's only one company that's still from the original Dow Jones Industrial back in 1896, and that is General Electric. But the Dow is a great measurement of what the market is doing. Just one day out of time doesn't mean too much, but if you look at it over time, it can tell you a lot. A couple terms you do need to know is that when the stock market is generally rising, we call that a bull market. And when the stock market is generally falling, we call that a bear market. Sometimes you'll hear a headline on the news that'll say the bulls were running on Wall Street today, which means that the stock market was up. Now, I don't know if any of you have ever been to the New York Stock Exchange in New York City, down on Wall Street, south end of Manhattan. It's near Ground Zero. It's an interesting place to go to if you're ever there and have time. It's fun to see. It is, as I call it, organized chaos. There's just a lot of noise, a lot of energy, and a lot of things going on down on the floor. And you're up above. It's almost like being at a sporting event, but it's interesting to go to. Interestingly enough, there's a stock exchange here in Salt Lake City. It's the Intermountain Mining Stock Exchange. It's on Exchange Place, which is between 4th and 5th South, and between State and Main Street downtown. And it has a small little pit also, nothing like the one in New York City, but up above it they have all the different mining stocks. So that's interesting that we have a stock exchange here in our city, here in Salt Lake City. Talks briefly in the book that if you're going to start buying individual stocks, do you want to go through a stockbroker, or do you want a discount brokerage, or go online? Go through a stockbroker. Obviously, you have to pay a fee. They've got to earn their money. You can do discount brokerages or go online and pay very little. I would just say this: if you're going to use a discount brokerage and do it on your own, be very cautious. Take your time and go very easy at first, because you're not getting any expertise. I will say this, having invested for many years, as I've told you, I've done best whenever I've used a full service broker, even though I have to pay that person. I think that's the best way to go, unless you're really into this, kind of like an Ann Scheiber, and do your own research, your own studying, and things like that. If it's your passion or your avocation, something that you really enjoy doing, then you might take a look at that. If you're going to use E-Trade or Charles Schwab discount brokerages or go online, just go easy at first. Make sure you know what you're doing. One other term that I did want to, in finishing this up on common stocks, trading in options, all those things I'm not really interested in, but I do want to talk about one item because it becomes popular whenever the stock market starts to do good, and that's called day trading. And day trading is on page 513. These are individuals who buys and sells stocks and other securities over a very short time period, usually within an hour or two. Day trading is just the opposite of what I'm talking about, and that's long term. Day trading, in my opinion, and I will just tell you this, is extremely risky. But every time the market goes good, and it'll eventually recover from this coronavirus and start to uptick again, people will come out and advertise day trading. You can go to a hotel and pay a few $1,000s, get trained, and they'll show you how to do it. You can sit at home at your computer and buy and sell these stocks and supposedly make a lot of money. Day trading, in my opinion, is kind of just like gambling. It's short term. It's just to make a quick buck. This is not why we're investing. We're investing to build long-term wealth. In fact, I've always said this. Let's talk a little bit about gambling. If you gamble, let's be honest, and we talked about this earlier in the semester, the more you gamble, the more you lose. The reason why is the house, so to speak, or the casino. Obviously, they're a business. They have to make money. Investing is just the opposite. The more you invest, if you do it intelligently, diversifying, and in it for the long term, the more money you're going to make. So that's my opinion on day trading. Okay, let's take a look at where we're at and where we're going. Let's review a few items, a few elements from this particular lecture in two parts. Number one, make sure, if you haven't done it from last week, email me why you don't invest, and I'll give you 5 points. And the 5-point assignment for this week is, what is one of your goals when you do invest now or start to invest? We're still doing our budget for 3 months, February, March, and April. Book report and term paper. When you're done with that, you can turn that in. It's not due till the end of the semester. Didn't mention it, but the 3 articles, the majority of you have turned that in. Once again, if you need help on any of this, or it's a little more challenging to communicate via YouTube and email, you have my phone number, 910-8499. Please give me a call rather than, have anxiety at home. I'd much rather talk to you. I got all these information right here at my desk. The people that I've talked to on this stock assignment, we generally talk for 4 or 5 minutes and get things taken care of and to make sure that we're on the same ground. I wish all of you well. I hope everyone's doing good. I miss seeing you. I miss my Tuesday afternoons from 3:30 to 5:30, but I wish you well. I encourage you again to do what we've been asked to do by our local governmental authorities and certainly by your people at Discover. They certainly have our best interest in mind. So everybody have a pleasant week, and we'll do this again in a while. Thank you.